Right now, as we speak, BigBear.ai, ticker symbol BBAI, is trading live at $6.14, down approximately 3% on the session, with the market actively pushing against that $6 support level. You might see that red percentage and instinctively think this is just another small-cap tech name bleeding out in a volatile session, or perhaps a momentum play that has run out of steam. That is the expectation, that these smaller artificial intelligence defense contractors are just high-beta vehicles for speculation, destined to drift lower as the hype cycle fades. But the reality is significantly more complex, and frankly, far more interesting than a simple red tick on your screen suggests. What if I told you that beneath this intraday volatility, the fundamental thesis of the company has just undergone a complete structural shift that the broader retail market hasn't fully priced in yet? While the crowd is watching the price action and worrying about short-term resistance at $6.60, the smart capital is looking at a balance sheet that has suddenly swelled with nearly $500 million in cash and a bottom line that just flipped from a reliable loss to a surprise net income. That is the disconnect we need to explore today, because that is where the opportunity and the risk truly lies. Most investors approach a stock like BigBear.ai with a very specific bias. You likely view it as a junior partner in the defense AI space, a sort of speculative lottery ticket you might hold alongside your Palantir position or a few shares of C3.ai. The general belief is that this is a growth-at-all-costs company that will burn through cash for years before ever returning a dime of actual profit. That is the common ground we all share. It is the comfortable narrative. But I want you to challenge that assumption right now. Look at the data from the most recent quarter. This company didn't just beat revenue expectations by posting over $33 million. They posted a net income of $2.5 million. For a company that was losing $15 million in the same quarter a year ago, that is not a minor adjustment. That is a tectonic shift in financial discipline. It forces us to ask a difficult question. Is this still a speculative burn story, or is it the early stages of a profitable defense SaaS compounder? When you trade Tesla stock or Nvidia stock, you are paying a premium for known execution. With BigBear today, you are looking at a company that is executing a turnaround in real time, yet the stock is battling to hold the $6 line. Let's look closely at the recent movement because the price action tells a story of indecision. We have seen BBAI surge 36% year-to-date, outperforming many peers, yet it faces intense selling pressure every time it approaches $7. Why? Because institutional investors are still weighing the risks of its recent acquisition spree against its improving cash flow. The stock recently dipped after the Q3 report, despite the beat, a classic sell-the-news reaction that often traps retail traders who don't understand the mechanics of institutional liquidity. Volume has been heavy, often exceeding 20 million shares a day, signaling a massive transfer of ownership from weak hands to potentially stronger, longer-term holders. You see this volatility on your Robinhood app or your Fidelity trading platform, and it feels chaotic. But if you zoom out, you see a consolidation pattern that is building a base. The stock has found support repeatedly around $6.06. If it holds this level, we are looking at a technical setup that could launch it back toward the 52-week highs. If it breaks, we could see a flush down to $5. This tension is what makes the stock so compelling right now. Now, consider the massive strategic pivot the company just executed with the acquisition of Ask Sage. This isn't just buying a small competitor, this is acquiring a generative AI platform that is already deployed across 16,000 government teams. Think about the stickiness of that product. Once a government agency integrates a secure AI workflow, they rarely rip it out. It's not like switching from an iPhone to an Android. It's a massive bureaucratic commitment. By bringing Ask Sage in-house, Big Bear isn't just adding revenue, they're adding high-margin, recurring software revenue that creates a moat around their business. This is the kind of detail that gets lost when you just glance at a quote on your SoFi Active Investing dashboard. You see the price drop and assume something is wrong. In reality, the company is spending its cash pile to secure its future. They have confirmed full-year revenue guidance of up to $140 million. In a macro environment where government spending is uncertain, maintaining that guidance is a show of extreme confidence. We need to talk about the sector momentum because Big Bear does not exist in a vacuum. The defense industry is currently bracing for a shift in administration and spending priorities. There is a lot of chatter about the Trump bump for defense stocks, the idea that a new administration might ramp up military spending, particularly in next-generation technology. Big Bear is positioned precisely at the intersection of defense and AI, the two areas most likely to see budget increases. Unlike investing in a broad basket of equities through Schwab Intelligent Portfolios or a generic Fidelity mutual fund, holding BBAI is a targeted bet on the modernization of the Pentagon. The Department of Defense can't fight modern wars with legacy software. They need predictive analytics, decision dominance, and secure AI. That is exactly what Big Bear sells. When you see names like Palantir hitting new highs, it drags the entire sector specifically into the spotlight. Big Bear is the smaller, more volatile cousin in this family, which means it has a higher beta. When the sector runs, BBAI often runs harder, but when the sector corrects, it falls faster. That is the trade-off you accept for the potential upside. I want you to pause for a second and think about your own portfolio. Comment below how many shares of BigBear.ai you currently hold and what your average cost basis is. Are you underwater from the highs earlier this year, or did you buy the dip in the fives? I am genuinely curious to see where the sentiment is among actual holders, because the institutional data is mixed. We see some insiders selling shares, which is never a great optical look, but we also see new institutional funds stepping in. It's a battleground stock, and your position in it likely depends on your timeline. Let's shift gears to the business model itself, because a lot of people buy the ticker without understanding the engine. BigBear.ai effectively acts as a decision dominance provider. They take massive, messy data sets, supply chain logistics, battlefield movements, intelligence reports, and use AI to simulate outcomes. It's not just a chatbot. It's a simulation engine that helps commanders and CEOs make the right call when the pressure is on. This is why they have contracts with the U.S. Army and major logistics partners. The recent move to partner with Pahang Aerospace City in Malaysia to build an AI-driven aerospace hub is another example of them expanding their total addressable market beyond just U.S. defense. They're going global. This diversification is critical. If the U.S. defense budget gets cut or frozen, they have commercial and international revenue streams coming online. This is the difference between a novelty AI company and a real business. A novelty company rides the hype. A real business builds diversified revenue channels. When you're looking for investment help or reading articles on investing sites, they often gloss over these contract details. But in the world of government contracting, the backlog is everything. Big Bear's backlog is growing, and that is the leading indicator of future revenue. However, we must address the risks, because they are substantial. This is not a set-it-and-forget-it stock like Apple stock, or a boring utility play you might find in a Fidelity IRA. The company is still small enough that the loss of a single major contract could devastate its stock price. They are competing against giants like Lockheed Martin and Northrop Grumman, who are building their own internal AI capabilities, as well as pure-play rivals like Palantir. The competitive landscape is brutal. Furthermore, while they posted net income this quarter, their operational history is filled with losses. One good quarter does not make a trend. We need to see them stack 3 or 4 profitable quarters in a row before the market will grant them a higher valuation multiple. There is also the risk of dilution. They have a lot of authorized shares, and if they decide to raise more capital to fund another acquisition, your equity could get watered down. This is a classic risk for small-cap growth stocks. You need to be aware of this every time you log into your Interactive Brokers account to check the price. Looking ahead to 2026, the scenario analysis is fascinating. In the bull case, the integration of Ask Sage goes smoothly, the government opens the floodgates on AI spending, and Big Bear hits that $7 target and breaks out toward $10. In this scenario, the company becomes a prime acquisition target itself for a larger defense prime looking to buy their way into AI. In the bear case, the integration is clunky, the government slows down procurement due to budget fights, and the stock drifts back down to the $4 range. The reality will likely be somewhere in the middle, a volatile grind higher as they prove they can maintain profitability.